In his latest edition of the much awaited and much anticipated newsletter, the Greed and Fear newsletter, Chris Wood of Jefferies has written quite in depth about the rising coronavirus cases. He speaks about the wave 2, he speaks about the impact of the wave 2 and the rising coronavirus cases on the economy. He's especially spoken about how Asia has been impacted and ravaged by the wave 2 of the coronavirus. Now, first up, what he's saying is that there have been renewed COVID setbacks over the past few weeks, especially in Asia. He says that Japan is paying the price for the country's extraordinary failure to vaccinate quickly and with a rapid pace. He's saying this particular failure, Greed and Fear believes that they are quite surprised by it due to the incentive to get further vaccination and to get rapid vaccination, given the fact that the country still harbors ambitions of hosting the Olympics. In fact, he's saying that the rate of vaccination in Japan has picked up quite considerably, but still he is quite surprised. Along with that, he's also spoken about Singapore. While Singapore cases on an optical level are still quite low, in the fact that the country is seeing around 35 to 40 daily fresh cases, he's still saying that he's quite surprised about how the country has actually been relatively slow in actually going ahead and vaccinating its entire population. Chris Wood actually mentions that the erstwhile premier of the country would have actually ensured a much faster vaccination. Along with that, there has been an outbreak in Taiwan as well that Greed and Fear actually notes. He's saying that Taiwan, in fact, was one of those countries that managed the pandemic as well as any country in Asia. And the problem is, according to Chris Wood, is that only 1% of the total population has been vaccinated. Now, when you're talking about how exactly he's looking at Chinese equities, he's saying that the latest credit data provides another reminder that China will very well outperform most other stock markets. He's saying that the tapering scare right now looks increasingly likely, given the fact that as inflation scare builds, unless the Fed cuts it short by imposing yield curve control. Now, coming to India, there's some bad news as far as Indian markets are concerned. What Chris Wood is saying is that he is quite surprised by the rally seen as far as the Indian markets are concerned. In fact, he says that when you're talking about the Indian markets are trending nearer to their recent highs. He's also quite surprised due to the rapid rise as far as the cases are concerned. And in fact, given the slower pace of vaccination compared to the rest of the world, in India, he's quite surprised as to how well equity markets have performed. In fact, he's saying Indian markets have very surprisingly outperformed most of the other countries and most of their peers. So what he has done is he has gone ahead and cut the allocation to Indian equities by 2 percentage points and has increased and given in the same ratio to Australia. Overall, a slightly concerning view coming in from Chris Wood this time around.